Corn seeing some spillover support from wheat, which had a big day midweek. Michelle Rook is back with a closer look in Markets Now.
A higher day in the grains on Wednesday. Ted Seifried, Zaner Hedge is joining us. And Ted, wheat led the rally here with this Black Sea war news. Talk about what the news was and what it means for the Black Sea grain deal first.
Yeah, Michelle, apparently there was an attempted drone attack on the Kremlin in an assassination attempt to get Vladimir Putin. Basically, Russia says it was the Ukraine. Ukraine says, well, we don't know what you're talking about. Either way, this is seen as a bit of an escalation, a direct attack on President Vladimir Putin. Now the question is, what will the response be, right? I mean, we've been talking about, whether Russia will continue with the grain corridor or not. I would say this probably doesn't bode well for that, Michelle. But not only that, does this cause a much bigger escalation over in Ukraine? And what does that mean, right? So, yes, you look at the wheat market, it's been very, very oversold. The funds have been really, really heavily short into that market. So it was dying for some sort of spark to get it to do something positive. And, today was that. You had an outside reversal higher day. This was a key reversal on the wheat chart. And whether we can follow through the upside or not is, well, that's a big curiosity for most of us.
Right. Hopefully we can bottom all of these markets on this news. The other thing we had was the Fed announced the quarter-point basis increase in rates, and we expected it. But, what's ahead? Can we get the funds back in this market here if the Fed decides to kind of pause from here?
Yes, if the Fed decides to pause, right? And if the Fed decides to pause, that means that inflation will be left on the table. And yes, I think your funds would get interested in coming back into the market. But that also really depends on if the Fed decides to pause. Their language was more proactive or positive towards that in this statement compared to last statement. But if they move to a quantitative tightening, back to quantitative tightening, well, that could be a problem for the funds too. So, it really remains to be seen. The Fed is going to wait another 3 months before they really start, or 3 weeks before they really start to figure out what their next move is going to be. And I think the markets are going to be a little wary of that and a little bit nervous going forward still too.
All right. Thanks for joining us, Ted Seifried, Zaner Hedge, and we'll have more Ag Day coming up.
For professional marketing advice specifically tailored to your needs, call Zaner Hedge at 312-277-0113.